Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out bundleselect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With bundleselect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with a national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004666902.
Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Kuchera.
Welcome in, Joe Kuchera with Real Estate Radio Live. Thank you for those that are watching us, following us on the live feed on Facebook. We always appreciate that. We want to continue to grow that segment of the audience. In this day and age, we are trying to reach as many people as we can to get the message out to many as people as we can. Just before I introduce my guest, just as a reminder, I am with you. Typically, the show is on schedule Tuesday, Wednesday, Thursday. We try to go at around 3:05 Pacific Standard Time. Keep that on track for our audience on our Facebook Live audience. Once we do that, of course, this becomes a podcast, so it's really important, more important for those that are checking in, watching us live. That's great, but we'd love to have you also make sure you download the podcast so you can follow the show, listen to the show at your convenience when you could do that. So a couple different ways you could find that. You could go to iTunes, just type in Real Estate Radio Live. You could go to our website, RERL-1522-Jason, find it there on Stitcher, Google+, any of those you'll be able to find it and download. If you need to reach me during the week, 408-838-9060, or you could always email Joe at RERadiolive.com. All right, let me invite my guest in today, CEO of Jason Hartman. It is Jason Hartman who's with us. He's a real estate investment expert, and we're going to have a number of different subjects today. We're going to talk about real estate and investments really in general, but he's got an expertise really across the board of what's going on with the market, some of the marketplace tax issues around the Trump plan, and much, much more. Welcome in, Jason. How are you doing today?
Hey, Joe. Good. How are you?
Great. Good to have you on finally. I know we had a couple of mishaps on our schedule, but good to have you here, and look forward to the interview and a wealth of knowledge you're going to share with our listeners and our viewers today.
It's good to be here, and I hope I can live up to that.
All right. Before we get started, Jason, I always like to, for our audience, give us a minute or so about your background, and then bring us up to the current roles and responsibilities, what you're up to today.
Sure. I got into real estate at a very young age. I was 19 years old, first year of college. I got interested in the subject because I wanted to be a real estate investor. And so I got my real estate license and kind of did the basics and learned the business, if you will. About 6 months into my career, I bought my first property, a little condo in Huntington Beach, California, and I've been investing ever since the age of 20. And I've been in the traditional side of the real estate business, and then in 2005, I sold my traditional real estate company to Coldwell Banker, and I started an investment business. Basically, we are a financial services firm for real estate investors. We help people acquire properties for investment nationwide, and I've been doing that ever since. And it's been a really fun business.
Great. Very good. So you're going to be a popular guy, I know, on this show, because I could tell you in the nearly 8 years I've done this show, I was live radio for years and now just podcasting because it just is a quicker, better, faster way to grow. But most of the emails, correspondence, feedback, questions I always get is on investment real estate. And it's typically because we're, headquartered here in the Bay Area, that's where the majority of our listeners are, but it's typically the same question, Jason. It kind of goes like, God, Joe, I'm really interested in investing in real estate, but it just makes no sense here. And so that's a lot of the feedback we get. So we'll be interested to talk to you a little bit about some of that. So I guess we could start 3 types of real estate investment, the market in the U.S. Maybe you could talk a little bit about that, and how does that fit in terms of what I was just talking to in terms of the Silicon Valley?
Yeah, good question. So basically, people, first of all, I hope your listeners believe, and they probably do, that income property is the most historically proven asset class in the entire world. And notice that I did not say real estate, I said income property. And specifically property that produces income, not property you buy for speculation, the buy low, sell high theory, the greater fool theory. No matter what I pay, some greater fool will come along and pay more. Very common in my home state of California. I should say my prior home state. I don't live there anymore, but I did for most of my life. And so we believe in investing in really conservative cash flowing properties in what we call linear markets. Okay. Look around the world, not just around the U.S., but around the entire world. There are basically 3 types of markets. There are linear markets, there are cyclical markets, and there are hybrid markets. And linear markets would be distinguished by one major thing: boringness. Boringness. Okay. Is that a word? They are boring. They are very boring places. And these are markets that just sort of, if you're looking at a graph, they just kind of chug along. They have little minor ups and downs, but nothing major. Whereas a cyclical market is the opposite. They look like a roller coaster on that graph. They have big ups, glorious highs, and really ugly lows. And then the hybrid market is, as the name would imply, it's in between the two, Joe. So the hybrid market is in between the two. Now, I hate it. It drives me absolutely nuts. It probably drives you nuts too. When you hear someone in the mainstream media, you might be watching CNBC or any news program or reading an article in the national media, and they'll be talking about the real estate market or the housing market. Right. And they will say, the housing market's doing this, the real estate market's doing that. And it's completely idiotic. Why? Because in a country as large and diverse as the United States, there is no such thing as a housing market or a real estate market. There are really 400 local markets. That's what we have. Okay. It's a very large, diverse country with all 3 types of markets in it. Now, interestingly, the most prominent index of the real estate market, of what the market is doing, is the Case-Shiller Index. And the major Case-Shiller Index that people have used for many, many years only profiles 20 markets. And guess what? Depending on your matter of opinion, really 14 or 15 of them are cyclical markets. Okay. So you're not going to get an accurate picture from looking at these indexes. Got it. You got to understand that all real estate is local. All real estate is local. So where you are in the Bay Area, I mean, that's a high-flying, non-boring market. Definitely not boring, right? No. It's going through the roof. It's crazy. You hear these crazy stories. A house sold on a bidding war for $800,000 above list price, right? You hear these kind of stories, and it's just absolutely crazy. And, the old saying is what goes up must come down, right?
Well, that's good. It's a good explanation, and I'm glad you kind of laid that out quickly, because my suggestion all the time, I'm a big fan of education information. I know you are. You live by that. That's how you guys have grown and got your credibility. The bottom line is be careful what you listen to and hear in the media. Typically, they're just doing things for reasons of ratings and try to get people's attention, and they really, in most cases, especially when it comes to the details that you just shared on real estate. Before we move along, speaking of that, if someone wants to know more about your company or what you do, Jason, what's the best way to reach you? Is it the website, phone number? What's the best way to do that?
Just go to jasonhartman.com, and we do actually have a toll-free number, 1-800-HARTMAN, but nobody uses the phone anymore.
That is funny. That's funny you say. Real quickly, I'll share that. We did a focus group recently.
You can actually call us, but nobody, they just go to the website.
No, we did a focus group recently on different things, and we had different age groups, and the millennials, actually, they said, don't even touch that phone. Don't you dare call me. That's the thing. Right. Just don't call me. Yeah. So let's talk a little bit about this renter's market, because as you're talking about investment property and the income property, I should say, and the opportunities there, tell us about the numbers, the reason why renters are just increasing and why this is still really, a good opportunity for people, because you hear from time to time, Jason, is, well, I missed the train, maybe it's gone. So I guess talk a little bit about the increase of renters, the population there, and if you believe there's still always opportunity.
Yeah, well, I mean, look, I hate when I go to some seminar or hear some hokey promoter out there saying, there's never been a better time to invest in real estate, And this guy is just full of crap, right? Obviously. Certainly there was a better time. Guess what the better time was? It was 1972. Yeah. Okay, that was a pretty good time. But the point is, I mean, look, maybe there's never been a better time in terms of being a landlord, because the demographics right now and for the next decade or so, maybe longer, coming at the rental housing market are nothing short of amazing. They are amazing in several ways. Now, when you look at the demographic cohorts, okay, that's what the demographers call them, cohorts, right? And you divide the population up. We've got about 320 million people in America. Divide them up into their cohort, right? We've got the we've got the maturers, and people don't talk about them too much, right? But we've got the baby boomers, because they're a big, giant generation, about 76 million people. Then we've got the Gen Xers. I'm a Gen Xer. And my generation's a small generation, only about 45 million people. And then we've got the millennials, or Gen Y, that came after me. And that's the biggest generation of them all. That cohort is about 80 million people, even bigger than the baby boomers. And then guess what? We're starting to take a look at Generation Z. Okay, and they are below or after the millennials, who have gotten so much publicity, right? And all of these demographic cohorts have a certain flavor about them, if you will, right? I think we all agree on that. And they have a certain way about them. They experience certain things in their formative years, certain types of music, and lots of things. But the millennial generation is interesting, right? Because it is moving into its prime household formation years right now. And with 80 million people moving through that funnel, if you will, they have got certain characteristics. Number one, now the millennial, it's a fairly long time frame, right? An 18-year-old, really a 20-year-old maybe could be called a millennial, and so could a 34-year-old. Okay, so it's a reasonably big aspect, but I'm just lumping that one together, right? So the millennial or the Gen Y generation, most of them saw their parents get burned in the economy during their formative years as a teenager. Okay? And that gave them, I believe, a very different perception of the housing market, of the economy, of the permanency of things. Okay? Whereas prior generations were much more into planting themselves and having roots and feeling that the world wasn't as dynamic as they did. And I'm saying dynamic maybe in a negative way, not a positive. And things were more permanent and more guaranteed for them. Right? For the millennials, nothing is guaranteed. They don't believe that. Although many would say they're the most over-entitled generation because they've been the most catered to of any generation ever. Ridiculous. I mean, they've been carted around to soccer games, and they all got a participation trophy for showing up. They didn't have to do anything great, blah, blah, blah. But anyway, that's another discussion.
It is, for sure.
So here's the thing about them, though, Joe. They are saddled with huge student loan debt. They're the first generation as an entire cohort to have a mortgage without getting a house included. Okay? That's interesting, right? And they grew up with the sharing economy. They saw the rise of Airbnb and Lyft and Uber and all of these other sharing economy things, right? And as such, I think they view the world in a much more portable, temporary, transient fashion. Okay? And I'm sure they'd all like to own a home, and a lot of them are buying homes, but as a percentage, not that many. But when you got 80 million people, there's a fair number of buyers. Right?
Absolutely.
But my point is that they will be renters for longer than other generations. And they're also delaying marriage and household formation. And they're moving to where the jobs are. I always say the best thing you can have on a resume is mobility. Being able to move to where the jobs are.
Well said. Here's what we're going to do. We are going to take a quick break. We have great information. Jason Hartman was with us, and as for our podcast, we are going to take a quick 1-minute break. For those that are still watching us, the live feed on Facebook, don't go away. Stick with us. It's just a 1 quick minute, and then we're going to have Jason back. We're going to continue talking about some more with the millennials. I'm going to get into the Trump tax plan and some of the future places. In other words, what are the places that Jason recommend to invest in, buy, and some of the trends going on. This is Joe Kuchera with Real Estate Radio Live. Stick with us again on the live feed. We'll be back with you to continue in just a quick minute. Thanks.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out BundleSelect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with the national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004-66902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. Thank you again for tuning in. Thank you again for those that are watching the live feed on Facebook. We appreciate that very much. Again, just a reminder, be sure to download the podcast. That way you can listen to the show at your convenience anytime you can. The focus on this show, if you're just new to listening, it's education and information. So almost 8 years now. The main objective when I started the show was to give you, the consumer, education and information on real estate in general, to make you a more wise, informed consumer, not to be an expert by any means, but to be more informed. So when you go to make decisions on your real estate, no matter what it is, buying, selling, financing, construction, no matter that, you know who to reach out to, you're better educated and informed, and that is our goal and will continue to be. Today we have online, who's been kind enough to spend some time with us, Jason Hartman, CEO of JasonHartman.com. Real estate expert, has had a tremendous amount of success in helping those finance real estate transactions throughout the country. Kind enough to spend some time. First segment, we talked a little bit about the market, some comparative markets, the real estate, investing, income property in general. We're going to jump into the economy now first, and maybe give an overview, Jason, if you will, about the Trump tax plan. I know it seems to be full steam ahead. Most of the people you listen to, economists, and I know in an environment where it's hard to figure out who wants who to win or lose. Over and above that, if you could get that noise out of the way, what's your opinion on the Trump tax cuts or adjustments or benefits, however you want to call them, and how is that going to relate to real estate over the next several years?
I think it's going to be good for the broader economy. For some segments of real estate, it won't be that good. It won't be that good for people that live in socialist-leaning states, like my former home state of California, places like New York. Definitely not a good deal for those people. Definitely not a good people who have mortgages in excess of $750,000 in terms of the balance, because they won't be able to deduct as much interest as they used to. So I think it puts basically downward pressure on high-priced areas and high-priced real estate. But overall, I think it's going to be very good for the economy. I think it's going to bring jobs back to the U.S. I think it's going to bring money back to the U.S. I mean, I haven't followed that a lot in the last 6 months since it went into effect, but that's my opinion. I think it will cause these companies keeping so much money offshore to repatriate some of that money to the U.S. And I think as part of it, as part of the Trump administration, everybody's talking about trade policies and so forth. And look, all the critics can say what they want, but it's basically a choice. Do Americans want good, high-paying, plentiful jobs, or do they want cheap stuff at Walmart?
Right.
It's your decision, and I say that since most people don't spend all of the money they make, hopefully, some spend more, but hopefully most people don't spend all of the money they make, then it's better to have high-paying, plentiful jobs than it is to have low prices.
Right.
Certainly, trade policies with tariffs will, at least initially, cause price increases, right?
Yep.
But I look at how life was 20 years ago, and I look at how incredibly cheap products are today because of technology and globalization, those two major trends. And, I don't know how much the world is awash in goods. I mean, how much stuff do we all need? It's really, I don't know that there's that huge of a benefit to having ultra cheap goods.
Right.
All it does is fill up your house with stuff that you usually don't use or need. Okay. And listen, I'm saying this and I'm a consumer, man. I buy stuff. Okay. But even then I think, the job angle is more important than that. And, everybody will split hairs and say, well, we can have both. And, look, of course we can have both to some degree, but there's always a trade.
Yeah.
Okay. You're going to either send your money offshore to buy cheap stuff, or and people over there are going to produce it, or people over here are going to produce it, and you're going to pay a little more.
Yeah, absolutely.
That's it.
Let's talk a little bit about, income property or income opportunities throughout the United States. You hear all kinds of different experts or, whether they are or not. Jason, the timing, this is the place to be, whether it's Texas, Florida, North Carolina. You listen to enough people, you could figure out. Can you give us a sense of, since you follow this closely than most, where if someone said, Jason, give me 2 or 3 states or specific areas where you would say these are probably some good places to invest in cash flow property?
Oh, sure. Well, we love places like Jacksonville, Florida, the Quad Cities in Ohio, Fayetteville, North Carolina, Memphis, Tennessee, Jackson, Mississippi, Indianapolis, Indiana, Little Rock, Arkansas, Atlanta, Georgia. These are like the linear markets that work. Okay, these markets work. Okay. These are markets where you don't care if the property goes up or down in value. Hey, sure, you'd love to see it go up. But the point is you're investing for yield.
Right.
And if you can maintain a reasonable income and expense ratio, and you can, unless something bad happens, and bad stuff does happen, okay? Right. Look at this. I'll be the first to tell you this is not foolproof, okay? In investing in anything has its ups and its downs, right. Especially the elevator business. That's a joke. That's a really bad joke.
It is.
Whenever I see an elevator repairman, I say, how's business? And they go, it has its ups and downs. They've all heard that one. And anyway, but overall, over the long term, income property is the most historically proven asset class in the entire world. There's nothing better than income property. Right. And you want to invest in these markets where you can get, give or take, maybe close to, maybe even, maybe a little over if you're lucky, about 1% of the value of the property per month in income. Okay. So if you buy a $130,000 house, and you can get $1,300 a month or close to it, you are doing great.
Got it.
Okay.
All right.
Let me compare that. Let me compare that to virtually any property in California. North, south, middle, doesn't matter. If that property in California is, say, $600,000, it will typically produce about $2,200, maybe $2,500 a month in income. Maybe $3,000 if you're really lucky. Right. Which, at the best, it's a 0.5 rent to value ratio versus a 1%. Right. So that makes it a speculative investment. I have something, and people can hear it on my podcast. Any podcast platform, just search my name, Jason Hartman. I have the rent to value ratio concept, right? Mm-hmm. And we talk about this extensively, and we talk about how in the 10 commandments of successful investing, commandment number 5 is thou shalt not gamble. Thou shalt not gamble. You want to buy things that make sense from an income perspective. Income, Joe, is pretty reliable. It's not perfect, but it's pretty good. Appreciation, not reliable at all.
Yeah.
They're very hard to time the market cycles.
Right. Very true.
I mean, hey, people get lucky and they do it, and great. Mm-hmm. But mostly, it doesn't work.
Right. Yeah, no, absolutely. Good point. We have about 4 or 5 minutes left. I want to make sure. So tell us a little bit about interest rates. I mean, they're on their way up. I think most of us would agree. Historically speaking, I tell people all the time, this is still wonderful. I mean, we've been really lucky for a long time. Rates have been but they're on their way up. Does it make that much of a difference in this investment market, investing in real estate? Let's say rates, the 30-year money gets to over 5%, 5.25%, 5.5% over the next year or so.
Oh, well, it's already there for an investment property because remember, for non-owner occupied property,
that's a good point.
More. Okay. And to answer your question, I mean, look, you're in the business. You know my answer already before I say it, but I know you're just queuing it up for the listeners. It makes a huge difference. My God, it's giant. Every 1% in interest rate equals about 10% in purchase price. Okay. So, roughly. Okay. So when the interest rate goes up by 1%, the price has to come down by 10% to make everything even. And it never does.
Right.
It's always lagging way behind that. So the bottom line is you just end up paying more. That's the reality of it. You end up paying more. And look, I'll be the first to tell you, I've been great on a lot of my predictions. Mm-hmm. I've been great on predicting what rents would do, what prices would do, but I have not been good at predicting interest rates. I've been kind of bad at that. Yeah. But this time I don't have to predict them anymore because the Fed is not opaque and weird like they were under Alan Greenspan anymore. Okay. Right. Fed now is seemingly pretty transparent. Mm-hmm. They said they're going to raise rates 2 more times, if not 3.
Right.
Okay. So we know rates are going up.
Yep.
They are. Yeah. One of the things, Joe, people have to realize, whether they're buying a home for themselves or an investment property, they've got to realize that the way we think of things is wrong in this sense. Most people, when they buy a property, they think, okay, the property is the asset and the mortgage is the liability. But I would argue that the mortgage is a huge part of the asset. Mm-hmm. The mortgage is the asset.
I would agree.
Because if that mortgage is cheap and it's 3 decades long, think about it. Anybody listening to this that goes to jasonhartman.com and clicks on the properties section and buys a property in any of those areas I mentioned, they will not have to make the last payment on that mortgage, Joe, until 2048.
Yeah.
Think of how significant that is. We will have over 100 million more people in this country by 2048. They all need a place to live.
Yeah.
Okay? I mean, we will probably have significant, if not massive, inflation somewhere in there. Okay? Because of government spending and so on and so forth.
Absolutely. Well said. Yeah. Well, unfortunately, we're just about out of time. Jason, before we let you go, if you could give our listeners one more time an idea where they could go to the website, contact you, what's the best place to do that again?
Yeah, just jasonhartman.com. That's JASONHARTMAN.com. And then my podcast is like yours, very popular. And it's on iTunes or Stitcher Radio, any podcast platform. Just search my name, Jason Hartman, in iTunes or wherever.
Great. Yeah, just a reminder, so go to jasonhartman.com, that you get all the information there about investment opportunities, all the education you'll ever need, and also be sure to download the podcast, and that's all. You could get that right off your website as well, I'm assuming, or iTunes or anything else, right, Jason?
Yeah.
Okay,
yep.
Perfect.
Absolutely, yeah.
Hey, Jason, thanks for the time. I want to have you back in a month or so and get us updated, and really appreciate it. A lot of great information. Thank you.
Thank you. Happy investing to you and your listeners.
Thank you. Take care of yourself. This is Joe Kuchera with Real Estate Radio Live. Thank you again for tuning in today, and thanks to Jason Hartman for spending some time with us. Again, for more information, go to jasonhartman.com. Great resource of information for investment real estate. We always get people asking. Well, I'm telling you, this is a place to go to educate yourself and look for some opportunities. Have a great afternoon. Until next time, take care of yourself.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.